Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced within the upper part of yesterday's range, and overall buyers were more dominant. Now, recently, we've seen a interesting relationship where the Russell has been breaking to new all-time highs, and Nasdaq has been weighing the S&P down. So the idea discussed in yesterday's recap was that if we can get some buying in NQ and we can kind of lift that weight off the S&P, then given that the Russell has continued to make new all-time highs, ES can also put in a short-term rally and go back up and test the 78 to 80 half and then its own all-time high at 83 to 85 and possibly even set a new all-time high. So heading into the open today, we're seeing some buying come into Nasdaq, and the larger time frame bias is already bullish, and Russell is already quite strong, and it has been quite strong. So as long as ES is holding above the 58 half to 60 half initial support, we are going to give more preference to the buy side and be a little more cautious and conservative on the short side. Now, the only time it would make sense to be more aggressive on the short side is if we saw a complete breakdown in Nasdaq, where it started taking out not only its overnight low, but even its recent lows around 46.72 to 46.79. If that area starts getting taken out in NQ, then that can continue to weigh on the S&P. So the main idea heading into today is that the markets have been consolidating within a range. We have been seeing narrower ranges come into the S&P. We know that the larger time frame bias continues to be bullish. Russell has been quite strong, and now if we can have some buying come into NQ, or at least if we're not seeing any all-out selling come into the Nasdaq, then that would be weight lifted off the S&P, and that can result in a move up into the 73 half to 75 half, and then 78 to 80 half, and potentially 83 to 85. On the downside, a break below 58 half to 60 half would mark short-term weakness, and from there we can go down and test 52 quarter to 53 quarter, and then the 46 to 49 zone continues to be key because it marks the recent short-term balance area low. So we're going to continue to use that as the bull-bear zone, and as long as that area is holding in the S&P, technically we're still trading within the recent few days balance. And if we break down below 46 to 49, now it would mark a shift on the recent market structure, and it could accelerate the downside. But even in order for that to happen, we would have to see broad market weakness and strong downside momentum. So right now, heading into the open, our short-term bias is going to continue to be neutral. We are going to favor the long side, but with the understanding that we do need to see some buying coming into NQ, and we do need to see sustained upside momentum in order for there to be a breakout or a sustained upside move in the S&P. And if we can break out above 67.75 to 69.75, then we can quite easily, of course, head up and test 73 half to 75 half. If we are breaking out on strong upside momentum with the other markets participating in the move, then we don't necessarily have to get a response at 73 half to 75 half, and we could be heading higher into 78 to 80 half, and even 83 to 85 is very much within range, and we already know the bigger picture bias is bullish. So even though we can get responsive sellers active at 78 to 80 half and 83 to 85, because it does mark larger time frame resistance, if we are heading up on broad market strength, sustained upside momentum, and Nasdaq is really getting some strong buying as well, then we don't necessarily even have to stop at 85. S&P can put in a catch-up move, and given that Russell has already made new all-time highs, ES can also do the same. And doesn't mean it has to happen today, but bigger picture, as long as we get some buying in NQ, that is where S&P could be headed. So off the open, let's keep an eye on 58 half to 60 half. If it's holding above it, again, it's a confirmation that buyers are more dominant. And then let's keep an eye on the underlying momentum situation on the NYC tick as well as on NQ. So far, we have seen some buying come into NASDAQ supporting the upside move. So that's going to be our primary focus. And if we see a drastic change in real time where momentum is to the downside and NASDAQ starts selling off, then of course we'll have to adjust. And that's why our short-term bias continues to be neutral. We are open to a move in either direction, but favoring a move to the upside. So those are the main thoughts heading into the open. Let's see if buyers can hold ES above the 58.5 to 60.5 initial support, and we'll take it from there.